Robschild. No investment advice. Welcome to the show where we view financial markets using technicals, macro, Ben Graham's investment philosophy, and crystal ball gazing. Today is Tuesday, October 8th, 2024. Today's episode, we start with the fact that the VIX is in fear and the S&P 500 is in greed. Divergences like this don't really make sense and they don't typically last very long. CNN's Fear and Greed Index is not just in greed, but bordering on extreme greed. When we take a look at the daily bar chart of the SPX, the S&P 500, we can see that we're very close to all-time highs, moving sideways more than anything. But this is not a very fearful-looking chart. Meanwhile, the VIX, the volatility of the S&P 500 index, again, this prices the options contracts. It says how much fear there is in market. Typically above 20 is fear mode. And although the VIX dropped off by 5.4% today, we are still solidly above 20 and still very solidly, obviously, in an uptrend. It's very hard to say when the VIX will ever reverse course. It's not the kind of thing. These charts you got to take with a huge grain of salt, but for the moment, it is going up still. Next on the agenda, we just want to mention again CPI and PPI come out Thursday and Friday. These are metrics that give us a very good amount of information as far as where inflation is, where it's going. We also have initial jobless claims coming out, as we do every week. I will not read the daily reminders. If you want to hear me walk through them, watch Monday's show. When you add up all the daily reminders, the market looks really scary to me. So my crystal ball reading remains bear market soon, and the Fed won't cut fast enough to save the economy. To get a sense of where interest rates generally are and where they're going, most people typically use the 10-year. It's not super short, it's not super long, it's right in the middle. Very notably, today we have a very tiny little doji pattern after a run up, suggesting that this actually might be a peak here in yields. At the very least, this looks like we want to go sideways. I've been expecting yields to go up a bit higher for certain trend lines that are developing on longer duration treasuries. But maybe this is it. Maybe this is the top of yields for a while based on this little pattern here. It really gives me the sense that it wants to drop back down the other way. One thing that really caught my eye today is the 10-year break-even inflation rate. This uses the price and yield of Treasury inflation protected securities, so TIPS versus the equivalent of regular treasuries, the Treasury bond yield. And this is one of the best places to see where the market is pricing inflation for the next 10 years on average. Now, I bring this up because very, very notably on September 6th, when it was arguably at the Fed target, 2%, it was 2.03%, and then we went up, we went down to a low of 2.02%. I had been talking about on those days, according to this, the Fed achieved their goal. Notably, on September 6th, that same day, that's when the 2-year, 10-year yield uninverted, or reverted, went back to normal, where you have longer dated treasuries, the 10-year yielding more than the 2-year, which is normal because when you lend your money for someone for a longer period, you want a higher payment. That's just makes sense. But very interestingly, that was the bottom of the 10-year break-even inflation rate. And so lately, we've been really trending up pretty aggressively up to 2.27%. As the expected inflation rate for the next 10 years. Of course, this obviously goes up and down. It's just something to really keep an eye on to see what's going on. If this heads higher, it kind of says that, then yields will have to go up. And, yields will have to go up. Not great for my treasury bond position. I don't think it'll keep going up, but yeah, just something to keep an eye on. Again, if yields go up and or credit spreads spread, as they're extremely tight, right, like unusually tight right now between junk bonds and treasury bonds, only about 3%, all paths lead, in my opinion, to junk bonds losing value here, which is why I can't help myself. This is like too easy of a play. I mean, maybe I'll be losing all the premium on these contracts that I'm buying, but I'm still buying more HYG puts. I can't not partake in this obvious of scenario of what's going on. I mean, how I could be wrong is if inflation doesn't go back up, so yields don't have to go back up, and the economy is perfectly fine. Everybody, unemployment doesn't rise, but typically yields will go up if the economy is fine. It would make sense for yields to go up. So I can't make sense of a bull case for junk bonds right now for where we are in the cycle. Add the daily reminders and everything together. But anyway, on just a little daily chart pattern, we had what's called an inside day of this red candle here, suggesting that it's still most likely to continue to lose value. I mentioned yesterday how oil had been gaining momentum to the upside, and it looked like it just wanted to keep going up and up. And I said, I don't know when it's going to stop. I really have no idea. Well, today it may have already stopped. We have an engulfing red candle, engulfing yesterday's green candle, suggesting that we're at the very least no longer going straight up. One of the traders that I follow, that I have an immense amount of respect for, thinks that we're headed to $50 in oil, along with with all of the obvious signs pointing to our incoming recession. That makes sense. So with those things in mind, maybe we have a peak in oil here. I also brought up REMX. I have 7, I think it's 7%. Well, it was 7 yesterday. It's probably 6, back down to 6 today, percent of my portfolio in this fund, REMX. This fund was worth over $300 in 2011 in nominal terms. I think this is a really potent dry powder waiting to explode. And yesterday it went up by like 6%, and it turned into a blow-off top. So it looks like we're just going sideways. A large amount of this has to do with there was an expectation for more China stimulus to be announced over last night, our time in the United States. And they didn't announce it. And so it's so funny. So then the Chinese market drops by like 10%. I mean, since I have a crystal ball here, I can see pretty clearly that there's a pretty likely chance that that they will re-announce the more stimulative measures tonight. It would make sense. I wouldn't think for a second that the people making these decisions are not highly invested themselves in Chinese equities. And so, just follow the money, folks. It's good for China for their stock valuations to go back up. They need the stimulus. They've basically been in this depression. And so I fully expect the money printer to start blasting away here to keep things going, keeping Chinese equities motivated, let's say, and so that involves REMX, because they use the metals, it's cobalt, lithium, battery metals. So with this move down today in REMX, it tells me that this move upward had a lot to do with China getting such a big bid, and the drop, same thing. Sorry, I lost the decal for a second there. This is REMX. So similar thing going on in KWeb, losing 10% today. I mean, it was pretty inevitable for this thing to crack down by 10% after going up 40% in like what, a week? An entire index of technology funds and of technology stocks in China. I mean, this has been just like one of the most bullish markets I've ever seen. Watching markets, this has been insane. So we're finally taking a breather again. My crystal ball says this rally will continue one way or another. Likely, I think it's very likely these stimulative measures will be announced literally tonight. It would just make sense. Always remember, you, the viewer, are watching a guy with a crystal ball talking about financial markets. So please take everything with a large grain of salt, and remember, every decision that you make is your own responsibility. I don't just say that out of like some legal obligation, although I do think there are some legal obligations it doesn't matter. But more so that like it's important for you just to like really have that in your head. Like, I am an investor, I am responsible for what I do, no matter what other people say, what other people tell me. Another chart that I haven't brought up in a while that really has been catching my eye lately and caught my eye even more today, IWM, the Russell 2000. Just this crazy tight consolidation here. Like, this has been going sideways for a while. Officially, it's a bull flag. You have very obvious pull here with the flag going down. This is a clear sign that it wants to break out to the upside. For the valuations of stocks in general right now, I'm not going to partake in this. But on a pattern basis, it looks like it wants to, go up. I mean, very clearly. But again, I'm less of a trader and I'm more of an investor. I care about valuations. It's just valuations and comparing valuations of things to other things. How are bond yields related to stock valuations? How are stock valuations in the US compared to China, compared to Brazil, compared to India, Mexico, Canada, wherever? That's why I always say at the beginning of my videos, technicals, macro, Ben Graham's investment philosophy. That's the important one. That's who I see myself as, a student of Benjamin Graham. I was not actually a student. I studied the heck out of his work. Last chart of the day, just notably, silver is on this previous trend line. I wanted to only bring up silver not because I see this as a decent indicator that this might be a buyable dip in silver, but rather to say that, I finally came across, it was recently, I don't know who it was, but another YouTuber that described the silver market as being completely erratic, like a total crazy person. It's setting you up for a pattern, just like, no, I'm gonna go the other way, and it sets you up for a pattern that's just like ultra uber clear, like perfect head and shoulders. It breaks down, it confirms, nope, gonna go the other way. So I'm not the only one that feels that way about silver. I just felt like talking about it. That's why I bring it up. And that's all from me and my crystal ball. Hope you enjoyed. Thank you for watching, and see you next time. Robschild.